Welcome to today's video of Bank It or Tank It. I'm Chad Shoup, and each week I'm going to break down everything you need to know about one stock. We're going to look at its latest news developments, its latest earnings reports. We're going to look at key competitors, some key statistics, and of course the price chart. We're going to dive into that and see what the key levels are and what those trends are showing us. And it's all for one purpose, and that's to figure out whether or not this stock falls on my Bank It list or my Tank It list. So today we're going to be taking a look at apparel retail giant Under Armour. Now, this is a stock that is no stranger to volatility. It can see its shares fall 50% in a matter of weeks or jump 50% in a matter of months. So this is one stock that is definitely on the move, and we're going to take a look today at everything that's going on with the company, and we're going to be able to tell you right away whether or not this is a stock that falls on my Bank It list, and that means that it's a stock that you can expect to continue to go up or to turn around and continue to head higher from its current level, or my Tank It list, which means that it's a stock that I think is headed lower, and right now it's at a point that you want to avoid it, and if it's in your portfolio, you need to rethink how you're trading that stock. So let's jump into this stock today. Let's jump into Under Armour, and we'll start with the latest news developments that are going on with the stock. So we'll just pull up a tab here on Google, and let's type in Under Armour, and let's get to what the news developments that are happening with this company. We'll click on the news tab, and now that's going to take us right to the latest news that are coming out on this stock. And this is important to take a look at with any company because the current news cycle can really dictate the current sentiment for the stock, and that can have a major impact on whether it's headed higher or lower. So let's take a look at what's going on with Under Armour. And as we scroll through these, the first one's talking about maybe Lamar Jackson signing with them. But then from there, they're looking at Under Armour CEO Kevin Plank says it's disappointing to have the retailer's integrity and reputation called into question. So this just gives you an idea of really the big news cycle that's taking place right now. And that is the accounting probe into the company's stock. So this could be a big issue that's going to be lingering for a while because, as you may know, the CEO, Kevin Plank, is going to be stepping down at the end of the year. So they're going to be moving on past him, bringing in a new CEO. But this accounting scandal that's coming up now could continue to stick around. And clearly, the investment community is a little worried about that. A new report alleges Under Armour dumped goods at TJ Maxx. So I've tweeted about this earlier, and I don't think that's a big deal. But it's still a negative sentiment here on the top news hits for the company. Inside Under Armour's sales scramble, pulling forward every quarter. And that's about the same topic before Under Armour faces federal accounting investigation. And then Under Armour shares crater on accounting probe, cut to 2019 revenue outlook. So with that last piece, it's really bringing us into the latest earnings announcement, because in that announcement, they actually posted great results. Sales were up, revenues were up. They beat expectations, and earnings even were ahead of expectations. So for the previous quarter, which would have been the third quarter, everything was looking great and this company was firing on all cylinders. There's just one problem. They cut the guidance for the rest of 2019. That's the fourth quarter. This is a major quarter for any retailer. This is the Black Friday shopping events heading into Christmas. All these consumers are spending way more money on goods over these next few months heading into the end of the year. And now Under Armour is saying that they don't see that as being as robust as we've heard from other corporations that are in the same retail space. So that's a warning sign that maybe Under Armour is taking a step back compared to its competitors, and it's struggling a bit here to drive traffic into its stores and through its web channels, because some of the weakness that it has been reporting lately is that, because they've been pretty upfront about this. They want to switch the sales channel from basically not from the outsourced markets and outsourced platforms that are bringing in the sales, which can help boost revenues, but it'll be at a smaller profit. So Under Armour has been working strategically to bring those sales channels directly through Under Armour, so that way they're able to generate even bigger profits for the corporation. And that's a great strategic move for investors down the road, but in the short term, it's going to create these road bumps that can cause investors to get skittish and run away from the stock. Because when you look at Under Armour, it's been going through a turnaround, and I'm going to get into this with the key statistics, but you'll see that it's been going through a turnaround for years now. And part of the reason Kevin Plank is stepping down is clearly from performance for the stock and for the corporation. There's other issues too, but that's always plays a factor. So its latest earnings announcement, while it had some positive news and then had a cut to the 2019 outlook, the big deal was the accounting probe. Because a cut to 2019 outlook, yeah, that's not too great, but they'll get over a rough quarter if that's the case. But when you have the CEO stepping down at the end of the year, and now you have a new accounting probe into the time period that CEO was running, Now you start to connect the dots together, and maybe there's a bigger issue. The reason why the CEO's, been kind of pushed out, and this new development with the accounting scandals could create a bigger issue for the company and kind of drag it through the dirt here for an extended period of time, even as they're going through this weak phase, trying to boost sales, trying to boost profits, and it could just continue to hamper the company and hold them back. So a lot of investors are concerned. So let's take a look at what a few of the investment analysts are saying about the stock after all these issues have been coming out lately. So we have a Jefferies analyst, Randy Koenig. He says, the shaved revenue guide indicates the company's turnaround continues to struggle as competition remains fierce, while an accounting investigation isn't helpful either. And then we have NPD Group analyst, Matt Powell, said, there is no indication in the near term that performance is coming back into fashion. And each of these really speak to what we've been talking about from the latest earnings quarter and from that current news cycle, that the negative sentiment is out there, and clearly the investment community is paying attention. They're worried about the stock. They're concerned this turnaround may not take place as sharply as expected. And the current CEO, Kevin Plank, even reached out lately. He's been pretty vocal supporting the company. And one of the comments that he made recently really stuck out to me because it kind of dictates Under Armour's approach. And he said that building products for athletes to help them train, compete, and recover will be where Under Armour is going to maintain their heavy focus. And in turn, that's going to pay dividends down the road. At least that's what he says he thinks. Clearly, he's on the way out. So his view may be very short term. But when you look at what the company's been doing over the years and how they really try to make a name for themselves, I know personally that it has been through some of the brand awareness that they've created through athletes. Because one of their main athletes, Steph Curry, we own his basketballs. My son owns his shoes. So we're a big fan of Steph Curry, and it's not that we're a fan of the Golden State Warriors, but my son is just a fan of watching him play. He's a magnificent NBA player, great three-point shooter, and just fun to watch. And that was enough to get him to go out and want his shoes when he was playing basketball. So it built that connection, and it directly, right away, that's what my son wanted to go out and get. And we ended up buying a bunch of Under Armour gear just through that franchise name that they had in Steph Curry. And then now they have also gone out, they have other athletes. They also have Dwayne "The Rock" Johnson. I actually have his shoes, and they're awesome too. So they're building these connections with some of these big names in the business, and it's generating traffic, generating revenue for the company, and that's the right way to market their products. They've recently came out with another one with Virgin Galactic now. This is a little different. It's not through athletes. I mean, I guess astronauts may be athletes, but basically Virgin Galactic, and they trade on the New York Stock Exchange, ticker SPCE, if you want to check them out. But they're a space tourism company. They're looking to take consumers, just people like you and me. Of course, you'd have to put up like a mortgage to go up, but a way to go up and kind of see the orbit of Earth and get to the rim of space and then come back down. But guess what? Their suits that they're going to wear are sponsored by Under Armour. And then you go to Under Armour's website and they have a whole page about it where you can buy shoes, you can buy clothing, shirts, to kind of dress like the astronauts are going to wear when they go on these Virgin Galactic tours. So it's another channel that they're able to generate excitement and intrigue and just something new to revive their company and to continue to grow their brand and get people excited about coming into their stores and buying their products. So I think that that's paying off for them, and it's just going to take time. They're doing a lot of work on this side, but I think it's going to take time, and I think it is working out. But of course, the big worry is that it's taking too long to work out, and the company's struggling in the meantime. All right, so now that we've heard what the analyst community has to say, we've looked at the news, now we're going to dive into their actual estimates. These are what they put on paper. This is what they expect the stock to do, whether it's a buy, sell, or hold. The first thing we're going to take a look at is their price targets, because price is everything, right? If you're looking at a stock, if you want to own a company, price is everything. So let's take a look at their price targets and how they recommend it. Right now, you can look at this chart and you see that the average recommendation is 2.81, which gives it a hold recommendation according to S&P Capital IQ, but they're taking the average estimate from 26 investment analysts. And this chart is one of my favorites to go to whenever I want to look at a company, because basically it's given us almost 3 years of future values here. 2019, of course, is almost over, so a lot of that data is already in the books. But you can see 2019 actual data, and then versus where they expect it to finish up at, so not much higher from where it currently is. But when you look at 2020, there's just a little bit of improvement. But then 2021, they really start to see revenue continue to grow and net income take a jump higher as well. But the key here is that they're getting farther out versus we don't see these types of moves in the short term there. You can see on this chart how they're going through this turnaround period. 2017, 2018, no growth. From 2016 to 2017, had a sharp drop in net income. And then from 2018, 2019, you're seeing no growth in revenues. So you're seeing this company basically stagnate at this point, and investors don't like that. They don't want to see a company that's slowing down or going backwards. They want a company that's growing. They want to get to that 2021 period where we're seeing revenues jump, where we're seeing income jump, and that's where we want to get closer to as well. But in this time period right now, where things are a little uncertain, that's why we want to dive in and we want to figure out whether or not this is a stock you want to bank on today, or it's one that you need to tank and avoid, at least for now. Now we're staying with S&P Capital IQ data here, but this is a great tool that they have where you just pull up quick comps, which is looking at the key competitors for the company, and then we can compare a bunch of key statistics over that as well. Now, don't get too caught up in the individual names. There's just a bunch of retailers here. We have Nike in there, we have Skechers, then they also have like Ralph Lauren, Carter's. So they're selling clothing, they're in the same type of industry. And we just want to look at how their stats stack up to Under Armour. So the key thing that I like to look at is the mean statistic, which is basically the average from those key competitors, and then we compare that with the Under Armour. So we want to see if it's better or worse, or just where they are in that line. And now the first one that we have here is market cap. The latest just gives you an idea that Under Armour is indeed a small company, 7.4 billion or so. The average is 23 billion. Nike, for example, is 145 billion. So that's a huge company, just to give you perspective on that. Short interest, now that's looking at the shares that are short, kind of that sentiment analysis that we were looking at before with the news and the investment community. This is a similar idea where you look at the short interest to figure out if investors are bearish on the stock. And the only one on this list that is more bearish on apparently is Hanes Brands. So Under Armour is right up there on the level with companies that are about to go out of business, are really struggling to generate sales, even though Under Armour is kind of on the cutting edge of that. They're athletic apparel, they're hip, they got all these nice spokespeople for their brand, and yet they're still one of the top stocks for being short, which means they're betting on the stock to go lower. So as there's more short interest on the stock, as they're shorting more shares, that means more people are piling on, expecting the stock to go lower. Then we look at the price. This says diluted EPS before, blah, blah, blah. It doesn't matter. It's the PE ratio, price to earnings. That's what we're looking at here. And you can see Under Armour is through the roof, 70 times. That's enormous. The average for these companies, 21.5. So what that tells you is that A, either Under Armour is way overpriced and that it doesn't deserve this multiple at all, or B, its earnings are just very small, very minuscule at the moment, and they're expecting that to grow. And as it does, you'll see that price to earnings multiple come down dramatically without the stock's price having to move, just based on when this quarter comes out, the earnings multiple really comes back. And that's what investors are pricing it on. Then we have total revenues and net income are our next two columns. And for Under Armour, this is where it's really struggled. Revenue's only 3%, net income's a negative 24%. So it's really has not done anything positive over the last 3 years. Revenues of 3% is just, it's horrible. This is not what investors are looking for in a stock. They want to see tremendous growth. I mean, you look at Nike, it's a stable blue chip company at 6% growth and 4% net income. That's just steady growth for a large company. But then if you're going to go into these smaller cap stocks, you look at Lululemon. That's another one that you think of kind of right up here with Under Armour. They're trying to get into this athletic apparel that you can wear around. Athleisure is what they call it, where it's athletic and leisure clothes that you wear it even when you're not working out, basically. Under Armour's right in there trying to get into that niche product, but you see Lululemon's been killing it. They have 17.7% revenue growth and 25.63% net income over the last 3 years, compound annual growth rate. So Under Armour's really slacking in that compartment, and it needs to really start to turn things around. That's the bottom line. Investors are going to get tired. They want to see this stock produce, and it's got to do that coming up soon. All right, so now we're getting into the last part of our analysis that we're looking at Under Armour through and all. We're covering a lot of information, and we really just want to have a good idea about Under Armour and how the stock's looking, how the investment community is thinking, what's really going on with the stock compared to its competitors. And then now we're going to look at the price chart, which is really where I get to unleash my talents, because this is what I enjoy doing. I love looking at price charts for stocks, and clearly it's going to be the deciding factor on our bank it or tank it for Under Armour today. Now let's dive into the chart and see what it's telling us. Now on this price chart, I already have a few key things put up that I want us to take a look at. And the first one's going to be this yellow line, and that's the 200-day simple moving average. So this is just a 200-day moving average. All investors really look at this when they're looking at a company because they want a general idea of the trend and to see if it's acting as a key level. So we'll talk about what that means for the stock in just a second, but I wanted to also point out this red line. This was key resistance for the stock going back to 2017. So this was a major resistance level. That means that the stock's going up, hitting it, and coming back down. And you can see that happen several times here over the years, and it just continued to act as resistance, sending stock prices lower. And then on the bottom here, we have a green support area. This is where investors would come in and buy it back. So investors would push it down, and then investors would push it back up at the support level and turn things around. So we saw that also several times. But when you get over here recently, in 2019, just August 2019, it broke below that green support line. So this was a worrisome sign that you see in a stock. So pull down, and then it comes back up. It tries to get back above that support area, which would be great. But in technical analysis, once you break below a major support like this that's been around for years, what happens is it turns around and acts as resistance. So it had a nice rally back up, but then it hit the support, acted as resistance, came down, tried to go back up again. So this was another great sign that you wanted to see the stock try to turn around, but it hit the 200-day moving average and then turned lower. So it used that average as a resistance and headed lower from there. And at this point, we see the stock heading into another downtrend. We can add another trend line here to start to look at what it's creating off of that previous multi-year trend channel that it was in. Now it's creating a new one. So let's change this color just slightly, pink, and then we'll add another support level. And you can see that these are really just pointing that the stock's going to be heading lower for a little bit longer. Now, I think my best case scenario here is that we may see a short pop. Based on an oversold indicator, we can look at these RRG lines. Now, you don't have to get too caught up in what RRG means. It's for relative rotation graph. And I love to use this. It's a great example of momentum and relative strength combined in the chart. It's really cool stuff, and I'll feature it in my upcoming Bank It or Tank It videos. But for today, I just want to use it as an oversold or overbought indicator. And it can also work as momentum. But when you look at this red line, it's giving us an oversold indicator. When you look back on this chart, once it gets down this far, the stock generally goes through a rebound period. And it doesn't have to be a massive rebound. But what we're looking for at least is the stock to push higher over the next few days, probably a week or two. So that's what we're expecting out of Under Armour at this point. I think in the short term, we're going to see it come back up to this red resistance level, the new one on the chart, and it'll test that period. And then I think it's going to head lower from there. And that move lower, I think it's going to send it back below $12 a share. Remember, that was the low end for the price target for the investment community. So if we really see this price pattern play out, then investment analysts are going to have to adjust their viewpoint on this stock, because if it falls to their low point, those high values of 30 that are up here, they're going to go away. These analysts are going to have to re-rate and cut the stock to a sell and push it even lower. It could even go as low as 10 before it really bounces off this bottom support area. So this stock is a stock that I think is in a free fall. And when you zoom out on a chart, you can see that it peaked in 2015 and shares have been trending lower since then. Then it had this counter move against that trend where it was going higher, which was great to see. It lasted for a couple of years. Very nice move, but when it's a counter trend against a broader downtrend, it acts as just a temporary stall. And now the shares are getting back into that sell-off mode. And I think the shares are definitely headed down towards $10 or so. So what that tells us as far as the Bank It or Tank It is that there's no way that this stock ends up on my Bank It list at this point. Okay, anything can change for the stock. It can rally, it can break above that new red resistance line, and then I'll start to change my viewpoints on the stock. But for now, until it breaks above that red resistance line that I just drew on the chart, this is going to be a stock that stays on my Tank It list for now, because we're going to see these shares continue to go lower. My price target is going to be around $10 a share, which is about 40% below where the stock's currently trading. So I see these shares as just are about to sell off, head even lower. So if it's a stock that's in your portfolio, you want to take a look at it and rethink if you're bullish on it, how your viewpoint is, where your key levels are. Have a game plan. Know when to get in, know when to get out. Now, you can make a ton of money on this trade if you trade options. Now, I love trading options. I trade options for a living. Now, if you want to learn how I make money in options, how I make money each and every month, and we have new trades coming up all the time, be sure to scroll below and click the link that'll tell you all about how I love to trade options and how you can make money in the stock market, even with smaller moves, not these massive moves that we're going to see in Under Armour, but even on smaller moves, just by using options on stocks to create these robust returns. So that's all from my bank it or tank it on Under Armour today. Again, Under Armour ended up on our tank it list today, but don't worry. Next week, we're going to be looking at a brand new company, a brand new stock, and we're going to go through everything from the fundamentals to the price charts again, ultimately figuring out if it's a company that's going to be on our bank it list or tank it list. And if you have any stocks that you want me to take a look at, each week I'll be reviewing a new company. So just leave me a comment below and I'll feature it in one of my upcoming bank it or tank it videos. So thanks for tuning in. And as you saw in the video today with Under Armour, it's going to go through some major moves in the coming weeks. Great opportunities to make money on a stock, whether you trade options or not. There's money to be made on this stock. So let's get it.